Remember when Chamath Palihapitiya, the tech investor who predicted Bitcoin would hit $200, said that it had replaced gold? Well, hold on to your wallets because he's singing a different tune now. According to the man himself, crypto is dead in America, thanks to good old regulatory pressure. Though he admits that crypto companies were a threat to the establishment, pushing boundaries and shaking up the startup economy like no other sector, the regulations have brought it all to a screeching halt. So, fellow investors, what do you think? Time to pack up and leave the crypto scene? Or do you still believe in the power of digital currencies? We'll see all that in this video. Hey there, folks. In this video, we'll talk about the Bitcoin bull Chamath Palihapitiya sounding the alarm on the death of crypto in America. But don't worry, we're not here to bury Bitcoin. We're here to resurrect your financial knowledge. So hit that subscribe button and join the Econify fam for more money moves. Well, it seems like the crypto industry is facing a bit of a rough patch, and Chamath Palihapitiya is pointing the finger at the regulators. According to him, these rule followers have been cracking down hard on bad actors in the industry, making it nearly impossible for crypto businesses to thrive. Palihapitiya notes that the United States authorities have been particularly harsh on crypto, likely due to the fact that it's seen as a major disruptor to the traditional financial system. He acknowledges that the crypto crowd has been pushing boundaries and taking risks in ways that other startup sectors haven't, but he believes that their luck has finally run out. It's a bitter pill for those who play the cryptocurrency game, but perhaps this is just a signal that it's time to refocus and reconsider their tactics. In his view, the writing is on the wall for the crypto industry, and it's time for entrepreneurs to take stock of the risks associated with the business. Although it's uncertain what the industry's future contains, one thing is certain: those who decide to enter the market will have to deal with a regulatory environment that is becoming more unfriendly. Really, it seems like the regulators are on a mission to turn the cryptocurrency industry upside down in the United States. Chairman of the Securities and Exchange Commission, Gensler, has put his foot down and demanded that all crypto trading platforms follow the strict-to-use securities laws. In a recent Quiet session with lawmakers, Gensler made a bold claim connecting the Silicon Valley Bank collapse to the crypto industry. Yikes! Talk about throwing some major shade. The SEC has really turned up the heat on the crypto industry by cracking down on companies and projects that they believe have been selling unregistered securities. With these cryptocurrency affiliates, it seems like they are engaged in an endless game of whack. Mullet. Following the implosion of FTX, a crypto exchange based in the Bahamas last November. We all know that. The SEC, along with the Commodity Futures Trading Commission, CFC, went on a rampage, targeting cryptocurrency exchanges, lenders, and other crypto-correlated firms, as well as stablecoins. But what's strange is that while the regulators are scrutinizing the industry like crazy, they haven't actually come up with any new regulations. What's the deal with that? The implosion of FTX last year caused shockwaves throughout Washington, D.C., where the company's founder, Sam Bankman-Fried, had become a major political donor. It's almost as if his political contributions put him on the CC's radar. Fast forward to January of this year, and 4 senior officials in the Biden administration called on Congress to up their game in regulating the cryptocurrency market. They believe that it would be a grave mistake to reverse course and deepen the ties between cryptocurrencies and the broader financial system. But isn't it ironic that the crypto industry was born out of a need for financial independence and freedom from the traditional financial system? Well, in February, the SEC proposed new rules that would change which crypto firms can hold onto customer assets. And in March, they issued Coinbase, a popular crypto exchange, a Wells notice, which is basically a warning that they may be violating securities law. That's like getting a notice from the IRS that they're about to audit you. In response to all this drama, Coinbase's CEO, Armstrong, recently met with MP Andrew Griffith from the UK's Economic Secretary to the Treasury. This has led to speculation that Coinbase might be thinking of relocating to the UK, away from the toxic regulatory environment in the US. If all of this wasn't enough, the SEC has also charged the crypto asset trading platform Bittrex and its former CEO with operating an unregistered exchange. It seems like no one is safe from the SEC's wrath these days. So, is Bitcoin clear in all of this? It's been a roller coaster ride for Bitcoin, the biggest player in the crypto game. In 2021, it hit a record high of $69,000, but then took a plunge as the Federal Reserve began raising interest rates to tackle inflation. This year, Bitcoin had a promising start, leading a rally of around 90s. making those who had declared it dead in 2022 eat their words. But just as quickly as it soared, it took a dive back down to $27,000, leaving everyone scratching their heads and debating whether this is just a minor correction or the beginning of a bigger downtrend. It's like attempting to forecast the weather in Texas. You barely know what you're going to get. And if that's not enough to give you whiplash, the confusion around crypto regulation is enough to make your head spin. What's a crypto commodity, security, or currency? In 2022, Gensler said all crypto assets, except for Bitcoin, are security. But then his FC counterpart came along and said Bitcoin and Ether are commodities, and everything else is a security. Like trying to navigate a corn maze blindfolded, you're bound to bump into a few walls. The cryptocurrency industry needs suitable regulation to grow in the United States. But policymakers and regulators seem to be taking a pointless, directionless crackdown on everything crypto with a lot of misplaced blame apportioning. Just like trying to put out a fire with gasoline, it's just not going to work. And despite all the confusion and chaos, some still have faith in Bitcoin. In early 2021, Palihapitiya predicted that Bitcoin would soar from $39,000 to $100,000, and then to a whopping $200,000. He didn't specify when this would happen, but he was sure it was bound to happen because the leaders are less trustworthy than a used car salesman. Later in the year, just before the peak, he said that Bitcoin had effectively replaced gold. And now, Standard Chartered's head of digital assets research predicts it might reach $100,000 by the end of 2024. Citing a halt to interest rate increases in the wake of the US banking crisis. Betting on your favorite sports team is probably the best idea to get this. You never know if they'll win, but you keep rooting for them anyway. So in light of all of this, is Bitcoin clear? Really not. There is still a chance that it will surpass $30,000 shortly though, given future economic data and the potential for a US Federal Reserve interest rate increase. Are we going to see a crypto exodus to a promised land? Well, since the heat is definitely on for crypto exchanges, it looks like some are ready to take their business overseas. Coinbase CEO Brian Armstrong is gearing up for a long and bitter court battle with regulators that could last for years. In fact, he's so fed up with the regulatory uncertainty in the US that he's considering moving the whole operation abroad. Anything is on the table, he said, including packing up and moving out. While Armstrong thinks the US has potential as a crypto market, the lack of regulatory clarity is making it hard for Coinbase to operate. They're not alone either. Bittrex is winding down its US operations due to continued regulatory uncertainty. But where are these crypto companies moving to? Hong Kong? The city's government is all in on digital assets and cryptocurrencies, and its financial regulators are proposing rules that would allow retail trading of digital assets. They're even helping crypto firms connect with banks. That's why some companies are already packing up their Asia operations and moving them to Hong Kong. At a recent congressional hearing, Rep. Tom Emmer accused the commission of pushing American firms into the hands of the Chinese Communist Party. Well, while Hong Kong is a tempting option, cryptocurrency trading is still prohibited in mainland China. Who knows? Perhaps one day all of us will be trading cryptocurrencies from the comfort of our brand new offices in Hong Kong. And that's a wrap. Did we just witness a necessary move to protect traditional finance or a power play? If you're still wondering about the crypto crackdown, just remember, it's always better to be safe than sorry unless you're playing Jenga. Now, before you go, don't forget to drop your thoughts in the comments. Like, subscribe, and hit that notification bell for more mind-boggling videos. See you in the next one.